Hello everybody. Today I start the subject which name is banking law, and here the unit was first. In this subject we have covered the 5 units. First of all I take the first unit, and that is definition of bank, creation of money and structure of commercial banks in India. Introduction. What is the definition of a bank? A bank is a financial institution licensed to accept deposits and provide loans. Bank also offer various financial services such as wealth management, currency exchange and safe deposit boxes. What is the key function? Accepting deposit, lending money, facilitating payment and settlements, providing investment and advisory services. Now what are the characteristics of bank? Intermediary role, connect savers with borrowers. Second, profit orientation, earn revenue through interest and service charges. Third is regulated entity, operate under strict regulation by the Reserve Bank of India (RBI). And fourth is facilitator of monetary policy, implement monetary policy through credit control and money supply management. Now next topic of unit 1 is money creation. Introduction of money creation. Now what is money creation? The process by which commercial banks create money by lending more than the reserve they hold. Example is fractional reserve banking system. Now what are the roles of commercial banks in money creation? It creates credit creation by providing loans and advances. Second is liquidity management, in which it manages the supply of liquid cash in the economy. And third is supporting economic growth, channeling funds to productive sectors like agriculture, industry and infrastructures. Parent structure of commercial bank in India. Now classification of banks, in which first is public sector bank, majority owned by the government of India, and its example is SBI and Punjab National Bank. Second is private sector bank, majority owned by private entities, example is HDFC, ICICI and Axis Bank. Third is foreign bank, bank headquartered outside India and but operating within India, its example is Citibank, HSBC and Standard Chartered Bank. Fourth is regional rural bank, that is RRBs, focus on rural areas to provide to small farmers, fund to small farmers and rural industries. Now public sector banks in India. Dominance in Indian banking shares in deposit and advances, two key features. Government ownership, ensure trust and stability, focus on financial inclusions and rural outreach. Now let's come to private sector banks in India. First is innovative services, technology driven banking like net banking and mobile banking. Focus area on customer service and profitability, and major players are HDFC, ICICI and Axis Bank. Now foreign banks in India. Global expertise, cater to multinational corporation and HIN is high net worth individuals. Example is Standard Chartered Bank, Citibank and Juice Bank. Functions of commercial banks in India. Primary functions accepting deposit and lending money, and the secondary function is to provide overdraft, locker facilities and investment services. Third is agency formulation, that is acting as agents for utility payments and government transaction and insurance services. Now what the challenge faced by commercial banks in India? Non-performing assets, NPAs, rising NPAs affecting profitability. Competition, increased competition from privates and foreign banks. Technological upgrades, keeping up with the digital transformation. And fourth is financial inclusion, that is reaching unbanked and underbanked areas. What are the future of commercial banks in India? The digital banking revolution, greater reliance on technology and finance and fintech partnerships. Its focus on financial inclusion, which means government initiatives like Jan Dhan Yojana, sustainable banking practices which focus on green financing and sustainable development. Commercials. Now we come to the conclude this topic. So bank plays a vital pivotal role in financing intermediation and economic growth. Money creation, commercial bank influence money supply through the credit creation process. Structure of banks and industry. India's commercial banking system is diverse and well structured, catering to various sectors. Next topic of first unit is principle of management in banks. A guide to effective banking operation and government include bank related imaginary. Introduction to management principles in banking. As we all know that what about management? Management is which manage the bank. Management is what? Which manage the bank, which manage various departments of banks and which manage banking every operations and what is principle of management in banking? Are guidelines that ensure effective planning, organization, leadership and control in banking operations. Importance is to ensure profitability and sustainability. Next is to maintain trust and reliability among customers. And the next is to comply with the regulating and manage risk effectively. Now next is slide is about key function of management in banks. It is about planning, which means setting objectives and designing strategies to achieve financial and operational goals. Second is organizing, structure teams and resource to optimize banking operation. Staffing, in staffing it recruit, training and retaining skilled employees. In recruiting it recruit always the skilled employees which make good planning, which organize its structure, team and resource to optimize bank operations, and training and provide training to that new recruiters so they do their work effectively. The next is directing, guiding and motivating employees to achieve organizational objectives. And the fifth is controlling, monitoring performance and ensure adherence policies and goals. Now, what type of challenges in bank management come? The challenges which bank management face is first is rising non-performing assets. What is non-performing assets? The non-performing assets is like that which are not performing their duties, which are that type of assets which are not useless. So it's the main challenges in front of bank management is that it rising that non-performing asset so that they work effectively and become the performing asset in place of non-performing assets. Next is impacting profitability and liquidity. Second is regulatory compliance, adapting to evolve policies and guidelines. Third is technological disruptions, keeping up with advancement in fintech. And fourth is competition, competing with private banks, foreign banks and fintech startups. Real world examples of commercial banks of bank management is HDFC Bank, focus on customer centric innovation and digital transformation. State Bank of India, that is SBI, which is the main public sector bank. It's efficient risk management and compliance. And next is ICICI Bank, which pioneered the adoption of technology and fintech partnership. Now we conclude our topic. And in it we say that effective management principle ensure bank operative efficiently, remain customer focused and comply with regulation. So effective management principle, what is effective management principle? How we say that this bank having effective management principle? We say that if they ensure bank operate efficiently, remain customer focused and comply with regulations. Because customer is the main centric in bank. If the customer stayed in your bank and remain your customer for a long time, then we say that you have an effective management principle. And the next is, in an evolving financial landscape, innovation, risk management and transparency are vital for sustainable growth. So that all about the first unit of banking law. We have discussed about in our next lecture we discuss about the second unit, and after that third, then fourth, and then fifth, and then we finally completed. We finished the banking law. Thank you. Okay.